Good morning. It's Wednesday. Sorry, it's not. It's Thursday, May 15th. I'm Zach Howard. Here's your morning market update. What are we looking at? Middle of the month. Oil, WTI here. We're looking at a sell-off of over 3% down to that $60 US dollar per barrel. And when we look through the lens of oil alongside US bond yields, we're seeing a round circle and a square peg. Oil falling back like this. Ironically, as Trump is in the Middle East, maybe trying to talk up more production from OPEC, MBS, and his friends in the KSA, they get oil prices continuing to fall. Well, when you look at the price of money, the price of risk, those U.S. bond yields continue to rise. So one doesn't jive with the other. So we got commodities pulling back. Silver failed to trend. Natural gas failed to trend. Oil failed to trend. All reversing now to a bearish trend. Same here. Growth is not actually accelerating. But when you look at bond yields are going higher, which usually would implicate higher inflation, higher growth, especially in that short duration bond, that US 2-year yield here, 4.02%, taking out Fed rate cuts. So are they pricing in inflation that's going to reaccelerate and put pause for potentially crippling the Fed's hands on cutting rates? Walmart with earnings day and a CFO in the earnings call saying they're going to start to pass along increased prices in its goods from Asia, etc., because of tariffs at the end of the month. Continuing to watch that US 30-year yield, though, that round number, look, is about to tick here at 5%. Round numbers, humans love round numbers, but it's a very important signpost because the cost of money is rising for not just companies, people, the U.S. government, the biggest consumer of fiat money in the world, $37 trillion in debt, fiscal deficit of $1.4 trillion of new money they need to fund this year, not counting all the money that's coming due, that's rolling over, refinancing in the next 6 to 8 months for Scott Bassett and U.S. Treasury. So this is a concern, especially when you look at a longer term timeline of how that U.S. yield is and continues to rise. What else are we looking at here? VIX, volatility reading, it continues to slump under 20, which is a risk on mode. VIX back to bearish trend. Looking at that alongside S&P 500, now back to bullish trend, especially when you look through the lens of those 7 mega cap stocks, all in bullish trend, except for currently Apple and Google are the only ones not there yet. Very strong signal in NVIDIA and Tesla, the car company. They are on a massive run as that VIX, that volatility reading has come down. Bitcoin continues to be a strong signal, pulling back here. Opportunity probably to layer into that. Not a lot happening on the macro front outside those US 2-year, 10-year, 30-year yields. Keep watching that. Have a great day, and we will see you tomorrow, Friday, to end the week. Have a good one.